Okay, welcome back. So again, we're doing the 2009 cash and production budgeting question, and this time we're moving on to the final part, which is part D. Prepare a budgeted trading profit and loss account for the 4 months ending this, and it gives you a little bit of extra information if the budgeted cost of a unit of finished goods is 20 euros. So I've written out the heading already, budgeted trading profit and loss account for 4 months ending the 30th of the 4th, 2010. And we start with the normal thing you would have in a trading account, which is sales. And we get our sales figure from the information at the top of the question here. So we've got, it's for the 4 months, January, February, March and April. So we just have to take these four sales figures, 240, 255, 300 and 330, add the four of those together and get your total sales. Now that comes to 1,125,000. That's your sales. And then heading, less cost of sales, or less cost of goods sold if you prefer. And we start with opening stock. But of course, because this was a new business, there's no opening stock figure, so that'll be 0. Plus purchases. And this is one to watch out for, I suppose. From the budget, our purchases for the 4 months were, we just put in these three figures. But since we use the matching concept when we're preparing trading profit and loss accounts, we include all purchases for the particular period, regardless of whether they've been paid for or not. So we've got to take this 84,240 for January, 57,120 for February, this for March, and this for April. Add the four of those up to get your total purchases figure for the 4 months. So I'm going to just put in that figure. I totaled it up earlier. It comes to 272,940. That's your purchases. So adding the two of those together, the opening stock of 0 and the purchases of that gives me 272,940. Then it's less closing stock. And our closing stock then is made up of two items, because there was a closing stock of finished goods and there was a closing stock of raw materials, and both of them have value, those stocks, as they sit in your warehouse, so they must both be included. So to calculate each of them, we're going to do a little calculation in brackets and then put the figure, the total figure here for, we'll say, finished goods and raw materials, and then our total figure for closing stock here. So closing stock, I'm going to go finished goods here. I don't have much room here, but you could put it on this side of it if you had more space. That's going to be your finished goods, and then this is going to be my raw materials. So in order to know what the finished or the closing stock of finished goods are, again we look at our production budget. So in our production budget, the closing stock for April in units was 6,900, we worked out earlier. Now the closing stock at the end of April, on the last day of April, is the closing stock at the end of the 4 months, because the last day of April is the last day of the 4 months. So this 6,900 is the number of units of finished stock you have at the end of April. So if we put that into our finished goods here as 6,900, of course we want the value in euros, so then we go back to our question and it says the cost of 1 unit of finished goods is 20 euros. So if we have 6,900 of them, we must multiply by 20 to get the total value of that finished stock, closing stock of finished goods. And that comes to 138,000. The next thing then is the raw materials. And again, we look back to our work that we've already done. We go to the materials purchases budget. And we looked at our closing stock then in April which again is the end of the 4-month period, so at the end of April, was 4,360 kilograms. 4,360 kilograms. And we already know from the question as well that each kilogram costs 150. So if we multiply that by 150, then we've got a figure of 6540. So our total closing stock then is our closing stock of finished goods plus our closing stock of raw materials. And if we add the two of them together, we get 144540. And we're going to subtract that, because we said less closing stock, from our opening stock plus purchases figure. And that gives us a figure of 128,400. That is our cost of goods sold, or cost of sales, which we subtract again from our sales to get our gross profit. And in this case, that gives us a figure of 996,600. So subtracting this figure from that figure gives us our gross profit. So then it's less expenses as a heading. And for our expenses, we just need to go down through the items in the receipts, or in the cash budget here in the payment section of it. And purchases we've dealt with, so wages is our next item. It's going to be 20,000 per month for 4 months, so 24 is 80,000. So we'll put that in the middle column here. Our next item after wages is variable overheads. I'm going to shorten it to V overheads. And again, for the 4 months, we just have to add up this figure plus this figure plus this figure plus this figure, and we have our 4 months variable overheads. That comes to 222,000. The next item here is our fixed overheads. So I'm going to shorten it to F overheads. Again, our fixed overheads is 28,000 each month, so add the 4 of them, or take one of them and multiply by 4, and that gives you a figure of 114,000. Okay, the next item in here is equipment, but equipment is the purchase of a fixed asset. That doesn't go into a trading profit and loss account. But what does go in instead of the purchase of the fixed asset is any depreciation on any fixed assets. So we know there is depreciation on equipment. And we worked it out earlier in this when we were working out the depreciation. We divided the cost of the asset by 5 because it's going down in value over 5 years, and then by 12 to get a monthly figure for depreciation. Now, if this is a 4-month profit and loss account, then it's 500 per month for 4 months. So 500 multiplied by 4 is 2,000 euros. So we can put in 2,000 euros here, and then tot up these 4 expenses. They come to 418,000. And if we subtract our expenses from our gross profit, we get what's known as our operating profit. So subtracting the 418 from the 996,600 gives us 578,600. And lastly, from here, we've one more expense, but we keep it separate. We don't list it with the other expenses. Is this interest of 200 per month. So for 4 months, 2, 4, 6, 8, it's going to come to 800. And the reason we keep it separate is because we don't include it in calculating operating profit, but we do subtract it when we're calculating net profit. So we have interest, or less interest if you prefer. 800 we said. Since we're subtracting, we'll use these brackets. And subtracting the 800 from the 578,600 gives us 577,800. Put a line under that, and as I said, that is your net profit. And that's it.